Why is Dr. Copper an indicator of demand in the world, indicating that happy days are back? Why is crude surging? Is it China or fear of a full-blown recession that has melted away? Peter McGuire, Chief Executive Officer with XM, joins us live from Australia. And you've got David Lennox, represents resource analyst at Fat Profits. He also joins us now. Peter, good morning. Thank you for joining us.
Good morning. Lovely to be here.
Well, if you missed the World Cup, well, there's one on in India right now, the Hockey World Cup. And this time I've been told that India's favorite, not Australia.
Well, it wouldn't surprise me. You guys are very good at hockey. So don't be surprised. I think we'll go okay.
But I'm surprised with what's happening in the commodity market. We're talking about recession,
Yes.
we're talking about slowdown, and you got crude which has popped right back up, and copper which is up more than 10% this year. What's going on?
Well, I think first off, yes, copper's really embraced the opening of China, and it's galloped away from it was, I think, overly sold and very, very soft as far as price. And now we're looking at the best part of nearly 9,300 a metric ton. So it's put on a big move to the upside over $1,000. And as far as crude's concerned, again, it was pushed underwater. It was very, very soft. And with the US dollar coming off as heavily as it had, with the issues as far as production and OPEC not really changing their mind frame, then with China reopening, it's been all steam ahead, and crude's up the best part of about 10 or 11% in the last 12 days. So yes, it's been dynamic, and I think there's further upside yet for it.
David, is it suffice to say that it is the China reopening theme which right now is overpowering the global recessionary fears?
Well, good morning. You'd certainly have to say that, yes, that is the case. We are seeing the China reopening story really being the prime driver of crude prices at the moment. And yes, OPEC, and in fact, there's been little chatter anywhere from the supply side regarding any change to supply. So one would suggest that with the China story now front and centre, and yes, that gathering momentum, we will see the oil prices probably continue to run as well to the upside a little further. So one would suggest that the oil sector is going to have a pretty good couple of days as China does really get going in terms of opening its economy.
Peter, let me throw in one more ingredient in the melting pot. It is not the World Cup. It is not China. It is not recession. It's the dollar index. 115, my friend, has become 102. What do you make of
Yes.
that?
Well, from a trading perspective, it's been absolutely mind-blowing what we've seen against all of the cross rates and that US dollar sell-off. I mean, it's just been an incredible time to be short dollar, long all the other currencies, and traders are rubbing their hands with glee as far as what sort of profits they've made in the last few months. Now we're getting to that inflection point. Are we going to see a 101, a stamp through 103 very, very briskly? We're now sitting at about 102.80, 102.85. I think it's got the potential to probably edge lower. I won't be surprised to probably be at the 101 handle sometime this month, and for a little bit further softness, uneasiness as far as what the Fed's prepared to do, and probably an increase in rates for Eurozone and the likes of the UK. Japan has backed off. They're not going to raise rates. So there's the storyline, and a little bit softer for the US dollar yet.
David, I'm quite intrigued by the commentary coming in from OPEC this morning about China reopening, for instance. They're saying that, it's very much welcome, the easing of COVID-related restrictions. And over the short term, they think it's going to come with challenges. And we are seeing still heightened levels of infection. So I don't know how sustainable this knee-jerk reaction of a recovery in metals is going to last. What is your own sense, David?
Oh, look, certainly we think it will last. When you have a look at what is happening in terms of the opening of China, yes, the policy's been primarily now probably removed, but the underlying population, unfortunately, is still suffering. But once we do see some controls start to come in and perhaps China handled differently the way in which it's handled a pandemic in the past, that will be what markets are certainly looking for. It won't hinder the country reopening. Yes, it may slow it a little bit, but we really do need to see that country reopening, and even slowly would be better than the draconian zero policy, COVID policy that we've seen before, and that stifling growth altogether. It gets amplified when one looks at the fact that there's still stimulatory ripples running through the economy. So when you get the reopening from COVID, you get those stimulatory ripples still running through the economy. You can see why the oil prices reacted quite nicely to the upside. It really is getting that drive from China from those two activities.
David, while we can look at China reopening as a pet theme, that China is back and the consumption pattern will change, but this is China of 2023, not China of 2003. Population growth, demand growth, the underlying bent of the economy, the real estate sector, everything is so different that China of 2003 is not going to be China of 2003 is not going to be similar of China of 2023. Do you think markets are unnecessarily getting overexcited about China reopening?
It really is that very reason. If you have a look at China in 2003, it was significantly smaller in terms of its GDP numbers and its appearance in the global economies. Now it's the second biggest economy in the world, and really it's that momentum and that just sheer size of the country and its GDP numbers that will just drive markets quite quickly to the upside. You've got to remember, it's gone up 10 times in the last probably 12 or 13 years in terms of its economy. So from that point of view, it really, when we see even small movements in the economy now, it generates quite significant demand issues for commodities, for oil, and that's really what's playing on the market's mind at the moment. That's why with China reopening, just even a little bit is putting quite good pricing action under commodities and the oil price.
David, comment on that China point. This is China of 2023, not China of 2003. Markets are getting excited that if China reopens, the demand patterns would be like what we saw 20 years ago.
Oh, look, yes, they will be, no doubt about it, because as I've said, China's significantly bigger and it has got more population to it. So it does mean that any incremental change in demand, it has quite a big actual physical change in the barrels of oil required. And really, as I said, that's what's keeping the markets quite hungrily looking for China to continue its reopening.
Peter, I think that question was meant for you. Do you think the markets are getting a little exuberant too soon?
Well, they're certainly not. I don't think they are in equities. If we're looking at commodities, if we're looking at currencies, yes, we've seen exuberance with strength to the upside for the euro and yen and pound. But if you're looking at commodities, there's some commodities, gold and silver, have performed extremely well since October. Oil and some of those base metals have rallied nicely since the start of the year. But there's really, they were oversold in many ways, and we had to wait to see when China was prepared to open. I understand their numbers. I understand their Lunar New Year commences this Sunday, so there'll be a quiet time for the best part of 8 to 10 business days. And it's like anything when you deal with these markets, they become toppy or they become soft. And at the moment, we've had a big move to the upside. I wouldn't be surprised to see a little bit of consolidation. But the overall theme, building on what David said, it's stronger from here, and I won't be surprised to take a $90 handle out very soon.
Hypothetically, if you have to just make one trade for 2023 and you want to go on a long holiday, but you're convinced that you will not look at that trade for next 6 months, what would be that trade?
I'd probably short equities.
Ouch. It's the stock market channel,
Ouch.
sir, you are on right now.
I know. I'm just looking at, I think the recessionary fears are too great, and I think that they're toppy at the moment for US equities. and I would be, I'd be looking at that. I think we're in a very complex global situation at the moment.
So Peter is specifically talking about going short on US equities. I'm just want to qualify this for our viewers. He's not talking about going short on Indian equities. David, what will be
US equities?
Yes. I wanted to get that underlying point out so there is no confusion. The gentleman before you came on the show said markets are going higher this year in India, so I hope that happens.
Yes, I think India is different in the sense where its demographics. You've got a very young population. You've got, I think, more upside over this decade, and I think the US equities are fairly well priced. I don't know if they'll pull back 15% or 10%, but I think that I would be looking to short equities more than go long. US.
Peter wants to come in with his one big trade for 2023. Peter, why don't we hear, David, why don't we hear that from you and then we'll wrap.
Look, I think if I wanted to do a big trade for 6 months, put in the bottom drawer, I'd be buying gold. We think the metrics are there for gold price to continue to move to the high side. We wouldn't be surprised if it through the 2023 year cracks the 2100 mark, and everything's in place for that to happen. We just need to see that US dollar crack below 100. The US dollar index cracked below 100, and that's going to be the impetus to drive gold prices higher. So that's where I'd be putting my 6 month sleeper into gold.
David, Peter, gentlemen, really appreciate your time. Thank you for joining us. And Peter, remember, World Cup. India is winning this time.
Yes, you probably will. You guys are too good.
Guys, really appreciate to have you on ET Now, and really appreciate that you could accommodate this interview request. I know it was late minute, but the fact you found time really means a lot to us.
Thank you very much.
See you later.